Hello, hello, hello. Welcome everybody to the Black Brain Trust. Today is Friday, September 21st. Today is Economics Friday. Before we start the show, I want to say that everything said on the show today is of our opinion. Please do not take our opinions as facts. If you need a certified financial planner, please go to cfp.net. There you can find a certified financial planner in your area and put your zip code, state, city, and state, and you can find a certified financial planner in your area. With that said, I am one of your co-hosts. My name is Lionel. I'm here with my other co-host, Mike. How you doing today, Mike?
Oh, he's muted.
Yeah, it's muted. How you doing today, Ulysses? How you doing?
I'm good, brother. How you doing, Lionel? How's Florida treating you, man?
I'm well. Florida's doing good so far. Nice and warm.
Cool, cool, cool. Glad to hear that.
All right. So with that
Hey, what's
said,
going on?
oh, all right. How you doing?
There he is. What's going on, Mike?
Good, man. Good. Good.
All right. So let's get into our first topic for tonight. Our first topic for tonight comes from Bitcoiners.com. Title: First Bentley Bought with Bitcoin in the U.S. Written by Emilio Janis on September 19th. Article: 2 weeks ago, Houston hospitality mogul Tillman Fertitta announced that his luxury car dealership would accept Bitcoin and Bitcoin Cash. Well, it seems like the market was ready for the move, and as he has already found his first Bitcoin customer. Oak Park Motor Cars is a dealership for Rolls-Royce, Bugatti, and Bentley, along with a selection of high-end pre-owned vehicles. It recently partnered with payment processor BitPay to allow anyone around the world to purchase our vehicles faster and easier. It is perhaps ironic, then, that the first person to take advantage of the opportunity was a local businessman. Houston restaurateur Ken Bridge chose to swap his coins for a Bentley Continental GT, he said in a statement. I always wanted I always had tremendous respect for Tillman and all that he has accomplished, and I wanted to demonstrate my support towards his pioneering efforts. Blockchain and crypto are undoubtedly the technologies of the future, and I applaud Tillman for making massive strides in Bitcoin consumerism. The list price for the Continental GT spans from around 220,000 to 320,000, but Bridge has been a long-time investor in Bitcoin. So says his dollar cost and so says his dollar cost is much lower. He first bought into Bitcoin at $6,733.97 when it was $648 and tries to take advantage of any price dips to invest more. If he made a big enough initial investment, his cash price could have been around $25,000 at current Bitcoin prices. Not bad for a brand new Bentley, although pretty unlikely to be the case. Bridge is such an advocate for cryptocurrency that he has implemented a blockchain based loyalty reward system in his restaurants. This has a companion app enabling users to order dishes through their mobile phones. With each purchase, a customer earns proprietary Ruby coin, which can be redeemed at participating outlets. Bridge's ultimate goal is to list Ruby coin on crypto exchanges. The cynical all the cynical amongst us may suggest that outing himself as the first Bitcoin Bentley buyer was just for self promotion. After all, most Bentley customers choose not to identify themselves. Hey, maybe the whole purchase was just a marketing ploy to get some press. Well, if so, it worked. So best of luck to him. All right. First Bentley bought with Bitcoin in the US. Two thoughts about this. I also believe it was a marketing ploy, but still, the this is another log on the fire for adoption because you have this luxury car dealership owner. He is allowing people to purchase luxury cars or even rent high-end luxury cars through cryptocurrency, and also the restaurateur. Undoubtedly, I'm guessing he owns many restaurants across the Houston area, and he's allowing people to purchase dishes with cryptocurrency and to order dishes and have his proprietary coin, the Ruby coin. I've never heard of it, but still, this is another log on the fire for adoption of cryptocurrency. With that said, he purchased this Bentley GT Continental through BitPay. BitPay is an unsecured credit card where you are allowed to put Bitcoin on it and spend it just like a regular credit card. It has a Visa logo on it. My question to you all is, outside of your all's comments, is would he have to pay taxes on this purchase?
The $1 million question.
So there is a sales tax on this, right? But because it's being paid through, because it's being paid through Bitcoin, that can vary. You can get around that. But if it's written down as a sale and and the VIN number is registered as a sale, then yeah, he would still have to pay the taxes. So he could get around it. But there's so much legalese that's involved in doing that. It may not be worth it for him to try to get around it.
Go ahead, Complex.
I will speak on it in just 1 second here. It's a little noisy.
All right. So you're saying, okay, I understand what you're saying, Mike. Me also, I wouldn't try to get around it and circumvent paying the taxes on it, whatever. I would amount of tax it because the government want their money, so it'll just be easier for him to pay the whatever taxes owed on this high end purchase.
But I personally don't think he is doing this for attention. If you look at who's buying Bitcoin, right, and who has these wallets, right, these are baby whales, medium whales, large scale whales. Those are the guys with the money. Those are the people with the money. Those are the people who are willing to spend, right? So if they need to offload their Bitcoin, what other best way can you do it other than offloading it through a dealership on a large scale, right? I don't know how much that Bentley costs. Probably about 250 grand, right?
Mm-hmm.
250 grand in Bitcoin. Now, if you're a person buying it, you just write that off as a business expense, right? If you're the dealership, you're taking on coins that are going to be redeemable, definitely redeemable in the next few years.
Correct.
Yeah, I was gonna say it's a real, depending on how you set it up, it's a very streamlined purchase mechanism, right? Because if the dealership has an easy way to say to convert the currency within, say, like 24 to 48 hours, right? So there could be maybe, say, like a transaction fee that sort of pads whatever sort of variance in the currency, right? From the time the transaction takes place to the time that the transaction or the currency is then converted into, say, like the US dollar or whatever the national currency is, right? They convert the crypto back into a fiat, right? On the purchaser side, you're basically buying the shit largely free and clear. Okay, the tax implication is going to come in on the dealership side, right? But what the dealership may do is is put it all into an all-inclusive price, right? And then do the crypto equivalency on the price, and then you pay it in crypto. So on the purchase side, once they convert the currency back, right, and they clear it all out, they can show that taxes have been paid for. Now, on the purchaser side, okay, you've got this vehicle. You just registered it, all this type of stuff. I'm not really sure where the tax implication lies on that side. But I can see how the
Excise,
dealership, huh?
excise tax.
Excise tax. So this would have to be something that's what written off as it would have to go down as an expense of some kind.
He could write it off as a business expense and recoup, up to 80% of the value of the vehicle.
But what if you bought? But what if you bought it with crypto?
It's still a purchase, right? It's still seen as a purchase. He still has a receipt. There's a receipt, a bill of sale for that vehicle.
That's true. It would because it would show a fiat currency equivalency on the purchase price.
Right.
Right. Okay. Gotcha.
All right.
Interesting.
Let's go to our next. Let's continue to our next topic. Our next topic comes from CryptoBriefing.com. Title: Golden State Warriors sponsor Rakuten buys crypto exchange. Written by Nick Hall on September 3rd. Rakuten has expanded its crypto investments and bought everybody's Bitcoin. Golden State Warriors and FC Barcelona sponsor Rakuten has completed a deal to buy Japanese cryptocurrency exchange Everybody's Bitcoin. Rakuten has a market valuation of more than 12.5 billion. So this 2.4 million or 265 million yen deal is relatively small fry, but it could have a major impact. Everybody's Bitcoin made a loss of more than 40 $440,000 in the financial year ending April 2018 and recently fell foul of the regulators. Japan's Financial Services Authority, or FSA, effectively raided everybody's Bitcoin, carrying out an on site inspection that led to charges in April that the exchange was not doing enough to fight money laundering and terrorism. A litany of complaints included risk management process, accounting, and other flaws that require serious remedial action. So, what is this for Rakuten? The Japanese firm maintains it is to satisfy customers of its security subsidiary that need a simple global payment system, but it goes deeper than that. Simply put, the cryptocurrency exchange provides a digital on ramp for crypto fiat currency conversions from around the world. It could convert the company's vast and complex payment system into a streamlined blockchain based solution that converts all fiat currencies into cryptocurrency. That could make tracking and cross border payments much easier for the company, and it could also put a dent in PayPal's earnings if adopted across the board. Rakuten could even use its own coin to do so. Rakuten has invested heavily into blockchain technology and has revealed plans to launch its own token in the near future. Back in 2016, the company bought the IP of Bitnet, a crude Bitcoin payment processor, and opened the Rakuten Blockchain Lab to develop its own blockchain solutions and integrate the best of the rest. What is Rakuten? Most of the world knows the company as the title sponsor of the Golden State Warriors NBA team and FC Barcelona, two of the world's most successful sports franchises. On American soil, Rakuten adorns the chest of Stephen Curry and Kevin Durant, while in Europe, the likes of Lionel Messi and Luis Suarez bears his name loud and proud for FC Barcelona. Rakuten is the largest e-commerce provider in Japan and the Rakuten Ichiba brand. It also runs a global affiliate network selling digital and physical products. The company also owns Viber, a voice over IP service, and has major investments in Pinterest, Lyft, and many more. It supplies digital content, communication services, fintech, and e-commerce to more than 1 billion people in 29 countries around the world. This business means it has to keep track of a vast number of sales, pay commissions and thousands of vendors around the world, and ensure that the product is delivered and everyone gets the right slice of the sale. Other businesses like Viber and Pinterest offer the potential of micropayments and pay as you go communications that simply aren't viable right now. That is a job that is tailor made for the blockchain and cryptocurrency. A cryptocurrency exchange wasn't essential to make all this happen, but it's easy to see how an exchange that can convert any fiat currency into one cryptocurrency token that is valid around the world could save the current company a fortune in payment processing. Considering the company's turnover and ambitions, this looks like a bargain. All right, so Golden State Warriors sponsor Rakuten buys Japanese crypto exchange titled Everybody's Bitcoin. All right, who has an opinion about this?
This is the emergence of basically fintech, right? So what you see a lot of big companies like or big banking companies like Bank of America and JP Morgan, all these guys are upset that everybody's becoming their own personal banks, right? And now you have a store like Rakuten that was formerly Buy.com. I think that was their name.
Yes.
Wow, really?
They,
No, actually, it
yeah,
was. I think it was Overstock, wasn't it? Or
no,
it,
Overstock is still Overstock, but I think Buy.com it was the former name
That
of
was
Rakuten.
okay,
wow. That's .com 1.0.
Right. If you type in buy.com, I think it changes into Rakuten right now. So what I'm saying
Wow.
here is that now your super shoppers stores are now becoming banks within themselves. No need for Bank of America. No need for Chase. No, even the article points out that they're going after PayPal. Right. So PayPal was the original fintech before fintech was even a name. Um, I think this is a positive thing. I
breaking
think
up a
this is
little
an
bit.
example of where you I
You
think this is an example where you can go.
you were breaking up a little bit. You broke up after PayPal was. Then you broke up.
PayPal was the original fintech before fintech was even the name, right? To
Hmm.
describe these companies. So PayPal was the first one, but now everybody's becoming a fintech now, and you even have oh, I won't go into that, but basically, I think what Rakuten is doing is actually a positive thing because if you look at the article, it kind of structures out what a fintech startup would be.
Okay.
I mean, is it kind of similar to like even like Alipay, institutions like that? Like
I
a
think
financial. What's that, Mike?
I didn't hear anything you said. Can you repeat that?
I was going to say, is it kind of similar to maybe could Alipay be looked at in some like kind of like in a similar vein?
I think Alipay is a little different, right? Because they're kind of they kind of only have like one trick pony to work with, whereas Rakuten is basically would be Circuit City Online, right? That's basically their role is to sell all these electronics and stuff like that. Um, that's their original. That was their original position to be in the e-commerce field. But now that they've adopted and made all these investments into the blockchain and the acquisition of this company, um, this makes them actually a personal bank. They really don't need to deal with anybody else. And now they're talking about cross-border payments. This also makes them, another Western Union for that matter, and not relying on a SWIFT system that traditionally most banks rely on.
And that's it's interesting, man. You say that because like I used to buy from buy.com. I'm talking literally back in like 99, 2000. I used to buy like video cards and capture cards and stuff like that, man. I was like I used to buy from them. So that's crazy.
Yeah, absolutely. I think um, it, anybody who's looking at this looking at this hangout should actually go back and reread the article and look at the structure of what they're doing. This is exactly what a fintech startup does.
Hmm. Okay. All right. Excuse me. Let's continue on to the next docket on the topic. The next topic on the docket tonight. This one comes from ccn.com and their blockchain news, written September 14th. Title: Mastercard thinks blockchain can simplify B2B transactions in new patent. Financial services giant Mastercard has invented a blockchain system that it believes can simplify business to business transactions in a high volume enterprise environment. This system is outlined in a series of three patent applications filed by the New York-based multinational firm in March, made public on Thursday by the U.S. Patent and Trade Office, or USPTO. Written in one filing, the patent authors explained that existing settlement systems, which settle individual transactions from end to end, do not scale well to the needs of the 21st century businesses. Currently, existing settlement systems often operate using the settlement of individual payment transactions. For example, after a transaction is processed, the issuing bank will transfer funds for the single transaction to the settlement network, which will then forward the funds for that single transaction onto the acquiring bank. Since most businesses are not financial firms, are financially regulated, B2B transactional innovation left payment flows between the parties intact, they wrote. Quote, as a result, 21st century B2B collaboration sits on a unwieldy, unconnected, and largely unchanged mid 20th century B2B payments platform. As the number of transactions being processed and therefore settled increases, the strain on the processing power of settlements systems and those of financial institutions increases, as well as the number of funds transferred that must occur every day. End quote. MasterCard argues that there is a need for a uniform payment system that will allow businesses to execute B2B transactions more effectively. And the firm believes a blockchain or other type of digital ledger could be an ideal solution for such an enterprise settlement system. A blockchain, the patent authors note, would allow data to be stored in the system in a clear format that is easily accessible and audible by connected firms while also remaining highly resistant to tampering. These features would be quite beneficial, particularly given that most of the participants would not themselves be financial institutions. The patent notes that the system could be built on either a public or private blockchain, but if MasterCard actually does attempt to build it, it actually it's likely that it would exist on a permission network. That's because, as CCN reported, MasterCard CEO Ajay Banga has a long history of bashing public, decentralized cryptocurrencies. In July, he said that these assets are junk, adding that he would only be interested in a digital currency developed by the government. All right. MasterCard thinks blockchain can simplify B2B transactions and new patent. As I was reading this, the patent that they wrote up, the Pacific patent, and this is an uh, uh, advertised article, but in in the patent that they were discussing, everything that they were discussing that the MasterCard wants their patent to do sounds much like the original points of Bitcoin and other cryptocurrencies and the use of the blockchain. So they are using the blockchain to settle business to business transactions, and they've been getting the jump on filing blockchain patents since I think 2014, 2015, per past readings that we had on this hangout. Um, it was something in a paragraph it which said they see that blockchain or any other type of digital ledger could be an ideal solution for an enterprise settlement system. I understand they're trying to get a jump on this. I understand that they're trying to get ahead on this blockchain revolution, and their CEO Ajay Banga has had a history of trash or just trashing uh, cryptocurrencies. I understand what they're trying to do, but it's just with the onslaught of what's the word I'm looking for? With the onslaught of adoption of cryptocurrencies. What he's doing in terms of bashing, only in terms of bashing cryptocurrencies, I don't think going the direction is going to get them to the forefront. But I do respect what they're doing in terms of getting ahead on the blockchain revolution. Any comments?
Well, they have to downplay it in order to justify, a strong dollar, because a strong dollar works for them. It doesn't. A strong crypto doesn't really work for them right now because it's not established as a reserve currency, right? So they're gonna knock it down because they have a lot of investments into the U.S. dollar. As long as the dollar is strong, they'll keep bashing it, and it might work it might work into their favor, because sometimes these analysts or these people speaking are actually two-faced. On one hand they're bashing cryptos, and on the other hand they got a nice little blind trust that's putting, that has a good stash and it's a good wallet, but you won't know that because the digital wallet hasn't been opened up yet.
Peter Schiff.
Mhm. Go ahead, Ulysses.
No, I mean, I could no, I co-sign exactly with Mike said, and I kind of just kind of jokingly brought up Peter Schiff. Well, I don't want to say jokingly, half jokingly, because for as much of a gold guy as he wasn't shy about rolling out his cryptocurrency platform, right? As much as he talked it down, but once he saw that it essentially wasn't going to go anywhere, yeah, he went ahead and did what he needed to do. So, people will say what they need to do to protect their position, but they'll flip as soon as they find that their position would be favorable if they flipped. So, in terms of, this was MasterCard, I think we were speaking on. Yeah, I agree with Mike. It's kind of like, okay, yeah, you're gonna bash your competition while at the same time adopting the same technologies that they've adopted. One thing that you do have is sort of like a leg up on the competition with regards to account acquisitions, and a user base, right? So it'd be in your best interest to talk down the competition that doesn't necessarily have the reputation that you have, right? While at the same time selling your user base on the fact that you are going to be rolling out these leading technologies, the same things that the cryptocurrency firms are leveraging, but with Mastercard's expertise and experience in the financial services sector, their customer base and their user base will be more they'll be more confident to use blockchain based products through MasterCard, and that's kind of what the angle is.
Okay. Any other comments on this one? All right. Let's go ahead and continue on the next topic on the docket for tonight. Excuse me. This one comes from CNBC.com. Title: Jeffries says AMD could triple its market share due to Intel's supply problem. Written by Tay Kim 10 hours ago. Article: Jeffries predicts AMD shares can go higher even after the chipmaker stock's stunning rise this year. The firm raised its price target for AMD shares to $36 from $30, predicting big market share gains from the chipmaker due to Intel's processor shortages. Jeffries also reiterated its buying rating for the shares. Analyst Mark Lepasis cited a report from the research firm Fubon, which said HP will adopt AMD processors for up to 30% of its consumer PCs next year, and Dell will use more AMD chips for its commercial PC line. As a result, the analyst predicts AMD may be able to triple its market share to 30% of the processor market from 10% today. Fubon's report that Intel will undersupply the PC market between quarter four 2018 and quarter two 2019 leaves us with higher conviction that AMD will report improving revenue, pricing, and margins near term, and that is positioned to take share in the high-end CPU, MPU, PC, MPU, and server market long term. The pastor said Friday in a note to clients titled I- INTC Supply Constraints, Multifold Benefits to AMD. AMD shares dipped 0.5% Friday, however. area's share shift potential to 70-30 from 90-10, the pastor said. Assuming our assessment of AMD's transistor lead in 2019 is correct, and Intel supply constraints linger through mid-2019, we think a market share of 70-30 is not out of the question. Last week, JP Morgan said Intel's chip shortage is worsening. The firm said Intel is having capacity issues from its delay moving to next generation 10 nanometer manufacturing technology. On Thursday, Micron confirmed industry's PC processor shortages are hurting demand for its memory chips. AMD's stock is significantly outperforming the market this year. Its shares are up 203.3% year to date through Thursday versus the S&P 500's 9.6% gain. The company's stock is the top performing name in the S&P 500 this year. All right. Jeffrey says AMD could triple its market share due to Intel supply problem. Now, Mike, I understand on past shows, you talked about this. Any other comments on this? Any additional comments on on this?
Well, I've been, as you said, I've been talking about this on previous hangouts, the last 2 or 3 hangouts for economics, and basically stating that AMD is going to skyrocket over the next 2 to 3 quarters. I would, looking at the stock right now, the stock is hit $32 for the week, but it's down to 31. At the rate that it's going, when I first announced on this hangout that we should be following it, it was at $18 a share. So now it's up to $32 a share.
Holy shit! So it climbed like what was that 24? I'm sorry, $14.
Yeah, $14. It was in 2015. It was $1 a share.
I recall.
So looking at the trends for Intel not being able to supply chip capacity or make chip capacity to supply vendors like Dell and HP. What's going to happen is they're going to have to find an alternative, and the only alternative on the market is AMD, and this is going to boost their sales as well as their stock price. I would estimate that their stock price by Q4 of this year, or end of Q4 this year, will probably be somewhere around $40 to $42, and by end of Q1 2019, it will probably be anywhere between $58 to $65. Maybe by next summer, it will probably hit anywhere between 100 to anywhere between $80 to $100.
So we literally need to start buying right now. If you didn't buy when you previously started talking about this a few weeks ago.
Absolutely. I've been hodling for a while, so their chips are immensely great at cracking for crypto mining. People are buying them off the shelves left and right. You can barely get them off the stores now. The gamer market love the video cards, but the chips are just as good for cracking numbers. So you're going to see a whole lot come out of
multi-use.
Yeah, these multi-use purposes.
You're breaking up a little bit there, Mike.
Can you hear me now?
Yeah.
Right. I was just saying that you're going to see a lot of people get into buying AMDs off the shelf just because the crypto mining aspect is so great, and then the stock price is going to be so great. They're going to buy the product and buy the stock too. And there's nothing wrong with Intel chips per se, performance-wise, but the problem is that there's a lot of bugs in them. There's delays in manufacturing. Trump with these tariffs is making import prices a lot higher because some of these chips, the components for these chips are actually made over in China. The new AMD chips, are actually manufactured in China as well. So they have a lot of leverage with the Chinese government because they share resources. The Chinese government is willing to share resources with AMD, and AMD is willing to share resources with them as well. So it's a win-win for AMD, and it's going to be a win-win going all the way into 2020.
Mm. Wow, $1.
Good stuff. Good stuff. Yep. Was it 2014?
2015.
Oh, 2015.
The
Huh.
company was on the brink of collapse at that point.
Yeah.
Mm.
Wow.
All right. Let's get to our next point of our docket. Moving right along here. Excuse. This was comes from Start Tribune. All right. Title: Job vacancies in Minnesota climb another 16% to new record high. Written by Evan Ramstad on September 21st, which is today. Vacancies in Minnesota employers. Vacancies at Minnesota employers climbing nearly 16% to a record 142,282, the state job agency said Friday, in another sign of the ultra-tight labor market. The data came a day after the Minnesota Department of Employment and Economic Development reported the state's unemployment rate dipped to 2.9%, the lowest since December 1999. Just 90,000 Minnesotans were unemployed in August, that report said. Friday data showed that for the 3 months ended July 30th, the state had 0.6% unemployed people for every job vacancy, a record low. The job vacancy rate was 5.6%, meaning there were 5.2 openings for every 100 jobs in the state, a record high. These figures reflect a very strong economy and high demand for labor statewide. Shantara Hardy, the department commissioner, said in a statement. She said the agency and its partners need to keep investing in training programs to bring more people off the economic sidelines to fill employers' needs. Median pay for the vacancies was $14.54 an hour, up from $14.39 an hour a year earlier and $14.34 an hour at the end of 2017. 56% of the vacant jobs in the latest period offered health insurance, the agency found. That's a good percentage. The agency said that 38% of the vacancies were for part time jobs, those offering 35 hours or less of work per week, and 12% were for temporary or seasonal work. About 60% of the job vacancies were in the 7-county Twin Cities region, in line with its proportion of the state's population. But job vacancies grew twice as fast outside the metro area in other parts of the state. The Twin Cities had zero point 0.5 unemployed people for every vacancy, while the rest of the state had zero point 0.7 unemployed people for every vacancy. Restaurants and other food service businesses were most starved for workers, accounting for 7,600 vacancies. Retailers
Did
were
I detect some pun there?
no. Restaurants and other food service businesses were most starved. I understand that one for workers, accounting for 7,600 vacancies. Retailers were next with 7,100 open jobs, and personnel care providers were next with 6,700 vacancies. All right, job market. Job vacancies in Minnesota climb another 16% to new record. Hmm.
I wonder if this affects anti gravity in any way. If he's a part of this demographic,
How would it affect him?
Uh,
I wonder if it is affecting him. Maybe him and
well, you.
Carl Anthony Towns and that other guy that's on Citizen's Hangout being interviewed.
Hey, you know what? It's funny that you mentioned that guy because I was gonna say, there's a lot of apparently a lot of vacant jobs available. And, there's a lot of people. I'm almost certain that could able bodies that could fill these positions as well. And what was the average pay rate of these? 14.25 or something like that an hour. I mean, it's a start.
Hmm.
Yeah, it's a
But
start.
is the
Well,
fact that the large percentage of the jobs that's available gives health insurance is good,
Oh, I think it's great.
which means they are giving long hours. No, they're giving the hours needed to support
Like
the family.
was it 38? 38 was a minimum 38 hours or something like that.
Yeah, so they got to be giving more than 40 hours to, and you can support a family with that. You don't have to go out and buy, well, not buy, get multiple jobs.
Well, I mean, especially in a place like Minnesota, right? Like, it doesn't have like the property values of like where I'm at right now, where it's just stupid. You know what I mean. So if you're budget minded, you can do something with that. Especially if you're taking a little bit of whatever excess that you have and you're dumping it over into stocks like, say, oh, I don't know, AMD, for example. You can get your money to grow long term at some point.
the problem with Minnesota is that it's the weather. Nobody wants to live there. You know, it's the long winter and the short
Right,
summer, and it's not desirable at all.
right.
Yeah, I can agree with that, but at the same time, I think we spoke about it before. How if you are trying to get into a job, and this is just an example, people. Are you trying to get into a job industry and that there's opening for that job industry in Minnesota? You go there, work a few months to come back to wherever you want to go to or come back home. Then I can see that. But still, I agree with you. Those winters can get brutal, and yeah, it's hard. But at the same time, that's not an excuse for you to not do what you have to do.
Well,
Well,
I guess the challenge here. I'm sorry. Go ahead, Mike.
no, I wasn't disagreeing with you. You shouldn't do what you're supposed to do, right? The problem is that we hear other YouTubers complain about the social life up there, about there's too many women who are childed, and the lack of cohesion out there in Minnesota. That a lot of those things weigh down, and that's why you see a lot of tech sector jobs actually move out to places like Austin, Texas, and even southern or NorCal now. I think there's a lot of big growth out there for tech sector jobs, even on the entry level side. So
Hmm.
a lot of Minnesota has a lot of headquarters. I think Target headquarters is out there. I think there's a few other Ameriprise headquarters is out there as well. I think they employ something like 35, 40,000 people just on campus alone. Um, it's just hard. It's hard to really justify sometimes, being there long term. So an entry
Hmm.
level job might be a year, 2 years. You have to ask yourself, is it really worth, sacrificing all of that just to get an entry level job? But the jobs are there, so it is what it is. I think people who may be coming out in the Midwest, like Chicago and Indiana, who are seeking employment because the layoffs from manufacturing and the shutting down of retail operations such as
Sears.
Sears and whatnot.
Hmm.
Sears,
Yeah.
yeah, might have to migrate north.
Yeah. All right.
Brother Jack, what's going
You
on?
know,
What's going on?
yo,
Yeah,
yo,
how you
brother
doing,
Jack,
Jack?
what's going on?
You
What's going on,
requested
man?
this.
Yo, Sakpak said.
Yo, what's going on?
How
Mabule,
much?
Mabule,
That's what's up. That's what's up.
Mabule.
My bad about
You
that, man. Just able to
you
just get on, but
yeah, you requested this topic to be on the docket tonight.
yeah. So what was interesting about that part of the article was at the end, right? It said, if I'm correct, at the end it was explaining how at least 50% of the jobs available are like part-time or temporary jobs. So it's crazy how like we discussed it a few weeks ago when we I think Mike and Gravity was speaking about how there's President Trump is discussing about job growth, or the economy saying job growth, but really the job growth is pretty much part-time jobs, not even 35 hours a week jobs. So I can see why it's hard to fill those positions because A lot of people are looking for um, full-time positions. Also higher paying jobs. Cause then the average job was like $14 an hour. So that's a
So
medium.
you're
So
talking like you're talking like part time, 14.25 or gig economy.
pretty
That's
much.
as largely being. Oh well, then yeah. How do you when you already have a problem with population flight, right? People leaving. How do you
Mhm.
draw people to a place like a Minnesota where shit you could come to California and roll the dice on those same type of job prospects, right? Live where it's a little bit warmer, somewhere like Miami or Florida, for example, where Lionel is now.
Understood. Understood. Well, yeah, I understand you're coming from. What's interesting is right. So I was on. I'm actually in Texas right now, and I was on my way to the airport when I was leaving Palm Beach, and I was talking to a guy. He works for he was like a head recruiter for a staffing agency, and he was explaining about like a lot of positions. I guess it's all about your area, but he's like a lot of positions are oversaturated. A lot of jobs, or a lot of people are qualified, overqualified for a certain job. But the jobs that are high demand, like again, like I heard Mike say, like technology, he was explaining like there's jobs out there in technology that if you know how to code for Lawson, I think it's called Lawson, if I'm correct, Mike. Lawson, Microsoft Lawson. Is that a program for
Your
coding?
mic is breaking up there, Jack. Your
Oh,
mic is breaking up.
can you hear me now?
Yes, sir.
All right. So he was explaining like if you have if you have programming or technology background, he said he can't find anybody to fill those positions, and he said there's positions out there that they're willing to pay you
Man,
$100 an hour.
man, talk to Nagone about that one.
Why you say that?
Yeah.
Because he runs a recruiting firm and he recruits IT like high level tech guys,
Mm-hmm.
and he'll tell you about the challenges of finding those guys that have those type of skills
Wow.
and what kind of money they're paying.
Can
Yeah,
you
he
speak?
said there was
Up.
one guy. He's a programmer. He lives in New York. They fly him to Miami to work 4 days a week. Right, the company flies him out. He gets paid $100 an hour, and they fly him back to get back home by the weekend. I'm like, dang. And he said he can't find anybody that can do this type of work. But
A
there's
block.
abundance. Go ahead.
Now, I was just gonna say a blockchain developer right now is $200 an hour.
Wait, excuse me, say that again.
A blockchain developer is about $200 an hour.
And
Jesus
also
Christ.
for every person, there's 16 jobs available in the blockchain field, and
Wow.
that went up from 14.
Finish what you were saying, Jack.
Nah, it's just there's jobs out there, and I think people need to like go where the money is. Because I spoke to um even out here, I'm talking to some of the people out here. There's like I guess there's like a boom where as far as the oil industry, because they're saying that like Texas oil, they have so much reserve of oil that they can't get it moved fast enough, right? So it's like they need more drivers. This guy I spoke to, he's a truck driver. He gets paid six figures just to drive to move oil, and I'm like, they're not. I guess if you look it up, there's information out there, but it's just there's positions out there for money, but I think people are not going. People are not willing to again. Wait, explain. Remember we had that last article about China, how in the manufacturing jobs, people don't want to, millennials don't want to work there because they see the type of quality of life they could have. It's just not worth it. And I think that's a problem that the quality of life is not what they want. It's not. They don't want I guess a $14
Blue
job.
collar job.
Job. You know what I mean? They don't want that
Well,
anymore.
well, Jack, I got
I
to tell you, as a former recruiter and HR recruiting manager, right? Like you have to be able to sell the benefits of a job outside of just the job itself. You have to be able to sell the type of the lifestyle, right? The type of living environment that the person would be in if they're going to say like be relocating, for example. Like there has to be plus positives in order to entice someone, right? Otherwise, you're going to be putting more on the contract with regards to what you're going to be paying this person in salary.
So in other words, it's like people are not really. So you got to sell the job now. So that's what you're saying, right?
Right. Oh hell yeah! As a recruiter, oh hell yeah,
That's
yeah,
crazy, man.
absolutely.
You know
let
what's
me tell you
crazy? It's
something.
like,
Like let's
go,
let's
go, go
take
ahead,
let's
go
take
ahead.
the same job. Let's take the same job, right? All things equal, same job. One located in Minnesota, the other located in Los Angeles. And let's just say the one in Minnesota pays $5,000 more a year. Guess what most people are going to take?
Which one?
Los Angeles.
Mm,
The
that's
$5,000 a year
I,
extra ain't enough to entice people.
damn.
I, I think for African Americans or for black men, this might be a bit different, right? I There are a lot of black men who have literacy problems such as digital literacy, political literacy, economic literacy. So you're starting from a negative position um, that doesn't allow for that sort of negotiation and flexibility in this sort of emerging job market. We're going into the fourth industrial revolution right now, and
Yeah,
there are a
you're
lot of
right.
black men who
Yeah,
are just unprepared. They're just
right.
unprepared for these markets, and if they don't get it together in the next 5 or 10 years, you're going to be completely closed out.
Right now they're not leveraged to kind of angle and make those sort of demands.
They'll be forced into a gig economy for the rest of their life.
Exactly. Right. Yep. Yep.
What's going on, Dollar? How you doing today?
Yo,
What's up, fellas? I was just on
what's
my
going on?
calculator. You said $100 an hour. Man, that is two
No,
hundred and eight two
$200
hundred.
an hour.
No, blockchain, $200.
Whoa! I'm sorry. What skill do you need to make $200 an hour? Hold on,
Hey,
You, you, you,
ask Lionel,
talk
ask
to
Lionel,
Lionel.
ask
hold on,
Lionel.
hold on. I just did the math at $100 an hour. That's $208,000 a year. So we talking $416,000 a year.
Ask Lionel.
That's almost about $40,000, $40,000 a month. And to get it, you A, you need the code, and B, um, there's not enough schools out there who to offer blockchain courses, but there are out there on edX, like the one I'm taking on edX, learning about blockchain and cryptocurrency. So it's out there,
So,
and
so this is blockchain coding,
yeah, the blockchain developer.
Yep.
blockchain developer. Wow,
And
Yep.
there's
that's
there's
crazy.
there's businesses that want blockchain developers. They can't fill them because no, people don't know about the technology, and B, there's not even enough people to hire. I heard today on a video where at one point in time for every blockchain developer there was 14 jobs, and that has increased to every
Yeah.
blockchain developers for every blockchain developer there's 16 jobs open for you.
Yeah. I could tell you
Wow.
just in the cannabis industry alone, every company's got some guy that they want that knows something about blockchain.
Wow.
Yep. By the way, Lionel, I got something to throw your way when we go private.
Okay. Uh, any other comments?
Mm-mm.
No, just wow.
Wow, that's right, right.
Right.
Let's get to the next topic on the docket for tonight. All right, this is another Jack special. This one comes from CNBC.com. Title: Home sellers slash prices, especially in California. Written by Diana Olick on September 20th. After 3 years of soaring home prices, the heat is coming off the U.S. housing market. Home sellers are slashing prices at the highest rate in at least 8 years, especially in the West, where the price gains were hottest. In the 4 weeks ended September 16, more than one quarter of the homes listed for sale had a price drop, according to Redfin, a real estate brokerage. That is the highest level since the company began tracking the metric in 2010. Redfin defines a price drop as a reduction in the price of more than 1% and less than 50%. After years of strong price growth and intense competition for homes, buyers are taking advantage of the market's easing pressure by being selective about which homes to offer on and how high to
Mm-hmm.
bid, said Taylor Marr, a senior economist at Redfin, in a release. But there are some early signs of a softening market, and the increase in price drops may be another indicator that sellers are going to have trouble getting the prices and the bidding wars that they may have just months ago. There is still a critical shortage of homes for sale, especially in the lower end of the housing market, but supplies did increase annually in August for the first time in more than 3 years, according to the National Association of Realtors. At the same time, the increase in the median home value is now in the 4% range, rather than the 6 to 8% range where it has been for the past 2 years. While, in, while inventory continues to show modest year over year gains, it is still far from a healthy level, and new home construction is not keeping up to satisfy demand, said Lawrence Yoon, chief economist for the Realtors. Homes continue to fly off the shelves, with the majority of properties selling within a month, indicating that more inventory, especially moderately priced entry-level homes, will propel sales. That may be true on a national scale, but in California, where home price gains were in double digits, active listings were 17% higher in August compared with August 2017, and sales dropped to the lowest pace in 2 years, according to the California Association of Realtors. Excuse me, California home prices were still up 5.5% annually, but that is down significantly from recent gains, and the median number of days it took to sell a home rose from 18 to 21. While home prices continued to rise modestly in August, the declaration in price growth and the surge in housing supply suggest that a market shift is underway, said Leslie Appleton Young, Senior Vice President and Chief Economist at the California Realtors Group. We are seeing active listings increasing and more price reductions in the market. And as such, the question remains, how long will it take for the market to close the price expectation gap between buyers and sellers? The price gap may close even more quickly if mortgage rates continue their trend higher. The average rate on the popular 30-year fixed mortgage loans is up more than a quarter of a percentage point in the past month and is knocking on the door of 5%, a level not seen in nearly a decade. All right. Title again, home sellers slash prices, especially in California. Now, Jack, you requested to put this on a docket tonight. What about this article stood out to you?
Wait, who requested
Jack
that
does.
one? Okay,
Say
yeah, I
again?
think
Jack
he
is the one
dropped.
he's on. Yeah.
Oh,
I think he
okay. So,
dropped off.
all right. So
There was a
Ulysses
lot
now.
of rain, I think,
Oh,
was going on in the background.
now Ulysses, you are out in California, and
I am.
Dollar Will, are you know about these things also. What about this article can you all say about this? Starting with you, Ulysses.
I would say it's fairly accurate. So I'm actually going to be checking out. I have a house I'm checking out tomorrow. Um, and so for the size, it's priced pretty well, right? Like I think the article mentioned, there's a little bit of mixed signals, right, that the market's kind of sending right now, because it's been strong for a while. It was part of the reason why on the commercial side, why we ended up getting squeezed out of our shop, because commercial prices are just shooting through the roof. So residential speaking, there's a lot more activity on that end. And so what you've had is you've had a whole lot of competition to try to find that right price in that right median range. And I can tell you that what that price range is probably like around anywhere. So we're talking about maybe like a 3 bedroom, 2 bathroom home, for example, right? We're talking about anywhere from maybe 22 to $3,500 a month. Okay, if you're looking for something in that price range, man, it is fierce competition out here. However, the higher end stuff, the more like McMansion style homes, gated communities type McMansion style homes, ranch style homes. Man, look, if you drive around in those communities, there are for sale signs all over the damn place. And see, people really ain't in the market to really try to be buying in excess or upwards of like, say, 750, $800,000 and up in California right about now. because everybody was kind of waiting. They were like, okay, look, we just saw this before back in 2006, 2007, 2008. We saw this shit. And then we saw it tank. And then we saw everybody who played it safe and played it smart buy shit up for pennies on the dollar. Right? So people are a little more mindful now. And that's kind of what that article's speaking to.
Yeah, I think can everybody hear me?
Yeah,
Hello?
you good, Dollar Will. You
Okay,
good.
cool,
You
cool.
good.
Okay.
We
Yeah,
can hear.
I think that article hit the home run showing the impact of interest
Right.
rate increases. Two things. One, interest rate increases, and when Jack comes back, he can confirm this. But the real estate market, it's local, but it's also, of course, impacted by national things like the interest, interest rates and stuff. But your hotter areas, this connects to what Ulysses was talking about, how if you offer a job to someone in California versus Minnesota, your hotter areas like, California, New York, your bigger cities like
Mm-hmm.
that, the real estate seems to pop, or the prices seem to escalate faster and higher, and
Right.
meaning that those markets seem to recover sooner, and the prices arc higher. But when Jack comes on, he can confirm that. That's just my perspective of having this gray hair and kind of seeing that. But that's I'll defer to the pro when he comes on. But so I think that's two things. And I think on the third level, I'm saying that because that would explain why California could say, "Hey, we see it slowing down," but then they talk about other markets and they don't really get
Exactly.
specific on where they are. You could be talking about middle Kansas City, or Iowa, or somewhere like that, where those markets just started to rise, and people may see, okay, I need to jump on these prices. And
Right.
also, when I bought my house in '94, my interest rate was 6.75. Now, but it had been over 12 or 13%. And so relative to where it was, that was a good deal. And even historically, 5% is a good deal. So
Mm-hmm. Right.
it's just, but where we are in this cycle, I think that prices are going to continue to come down. And then I guess the third thing the article addresses a little bit of pricing psychology, where if you see a house, if you see an ad in the paper that says price reduce, on a house, or new houses price slash $10,000, those kinds of headlines, that gets people's attention.
Mm-hmm.
They may not look at the small print, or not be aware that, hey, the interest rate is higher. So although the price on that house is lower, it's the same. It's actually the same. It says it's $10,000 off, but it costs the same amount of money as it did before. It's just that you're paying it over the long haul of the mortgage because the interest rate just went up. But people don't
Exactly.
look at it like that. They see the price is lower on the house and they go, "Oh, let's jump now," because people are very price conscious on like the sale price. They don't look at the amortization. What is the price of this money? And so I think that's what that article says to me, that if you live in an area where the price is low and you see a discount, that people could have one reaction, whereas in California the prices of the homes have already hit the ceiling, basically. In some homes, many arears are already
Many areas, but
in the
like
stratosphere.
I said, because because as soon as you start getting into those areas where the houses, the prices of the homes are around $800,000 and up, man, that's where you start to see a proliferation of for sale signs.
Right. Who can afford that? Well,
Blockchain developer.
yeah, blockade development. you know, exactly. So yeah. But from my trading perspective, you're seeing the impact of rising interest rates. That's the biggest thing, because when the interest rate goes up, when now that affects your the qualifying formula with the bank. So in order to make it fit, in order to make your debt to income ratio work out, since the interest rate is gone up, the only way to mathematically bring you within the within qualification of that mortgage is to change the only variable that you can, and that is the price of the home. So since the interest rate went up, they have to bring the price of the home down because
Down.
the bank won't
Right.
write that mortgage. The bank won't make the mortgage. And so no matter what the home seller wants to sell that house for, he can't sell that house for more than someone in that socioeconomic in that economic bracket can qualify with the bank for. So so when the
And
interest rate goes up, the price of the house has to come down because the bank is not going to change their qualifying standards.
and Dalrymple, let me just speak to something else here real quick. You know, the other thing too here is that, you know, what largely drove this spike in real estate prices here in California is largely due to the fact that, yeah, a lot of Chinese folks that are coming here and parking money here, and the way they're doing it here is the acquisition of real estate. Okay. However, there's only going to be so many new development tract, condominium, townhome type developments and stuff like that you guys are going to buy up in places like Porter Ranch and Northridge and, you know, places like this. There's only so many places where you're going to do this at. And there's only going to be so many people that do it. And I think we've kind of plateaued where where that's being done. You know what I mean? And now a lot of those people that have largely parked wealth here, parked money here, and they do this by sending their kids to places like UCLA. You know, but once they start to see after a few years, like just the rolling cost of living here, you know,
Yeah,
they become just a little more conscious, just a
right.
little more conscious about what it's costing, right? So now you're starting to see a slowdown of all the buying, the purchasing of all this development. And you know what? I might even shoot a video because I'll be in the area tomorrow. Maybe I'll shoot a video and upload it just to show you guys what I'm talking about. Um, but you know, they're slowing down on the purchase of a lot of this stuff, and that's largely what's pushing the sort of like the shift in the real estate market here that Lionel was speaking to with regards to this article, and why now that sweet spot, that median, like I said, 22 to 25 to $3,500. Man, that market is hot. It is hot, and it is hard to find a place if you're trying to get something 3 bedroom, 2 bathroom, like a home. Good luck.
Hey, Jack is back. We just read the other article that you requested to bring.
Yo, yeah.
Did you have any comments on that one?
Yeah. Sorry about that. I got caught up. I got caught up when I was over here. But finish regarding to that article, man. I know for a fact that like the affordability market is like really dried up. So it's kind of strange to see. Even I'm noticing here too that the like prices are on. I'm noticing a lot of reducement in prices as far as listings. So what does that mean to me is that, you know, people are just not, you know, willing to pay, you know, what houses were worth for right now. They feel like they're just waiting on it. So what I think is going on right now is that maybe that trickling bubble is starting to pop. It's starting off slightly, but I think as
Mm.
time progresses, probably the next 2 to 3 years, things are gonna drop. I know there was a video that Dollar Will sent us. I think it was about with Harvey Dent, and he was just explaining about the real estate market, and he was
Yeah, I was just
explaining like
watching
how,
those today.
huh?
I was just watching those today.
Yeah. And he was explaining about, you know, as far as how that's the price is gonna start dropping eventually. You know, as far as sorry man, I'm drawing a blank. As far as the market's trying to top out right now, and
Mm-hmm.
I see it, man. I actually went. I saw a home, right? Um, there was a home. It was sold at, what was it? 1.7, right? And somebody bought it for. It was a little run down, but they bought it for 780, right? So I was like that was
Okay.
surprising. So I'm noticing these deals are trying to pop up, prices are trying to drop. You're slowly hearing about it, but I
So
think as time
wait.
go on, it's
Hold
gonna spread like
on.
wildfire.
Jack, you saying that house dropped like that house dropped 50% in value?
Yeah, but the only thing about the house was it
Now,
was a little run down, but it was a foreclosed property though, and the
but,
property sold at 1.7 initially. That's when that was like
ooh,
2000 and I think it was 2011,
okay, okay,
and
so my question to you, and I think that why Dollar Will's asking this, right? Now, is this some sort of indicator to as to the similar type of real estate environment we're starting to see here when that other collapse happened? Say, what was that, 2007, 2008 when that happened? I mean, is it just going to be a little bit more softer? Because, dude, a 50% decrease, that's staggering.
hmm and I saw another home that was sold for I think it was 2.1. Somebody else bought that for 1.2, and that was by the water. And these are like
That's
deals
another
that
fifty percent drop. That's
you're not
another
hearing
fifty
about it
percent
yet.
drop.
That was twice I saw, and that was a span of 1 week. And I was like, okay, there's something going on here,
You breaking up a little bit, Jack.
but people are just wearing. You can't hear me?
All right, you broke off at there's something going on, then you just broke off.
Oh, I'm sorry, but I think like like people are starting to catch these deals. The ones with the money, the ones who have the money, they're just waiting and they're catching
Well,
these deals because they're out there. But that one was on the market for about the one that was for 780. That was on the market for 160 days, but it kept dropping
sh-
the price. And then the other
what?
one, huh?
No,
Go
I
ahead,
was going
Jack.
to say I was going to say that's why I was asking you. Do you think this is something that's indicative of what happened prior?
I think
Because
so too because
you had these steep drops, and then it was just like, dude, the people with the dough, boop, pennies on
hmm
the dollar.
yeah, yeah. So
Well, can I?
I think what's going on. I know the Gomes. I'm not. I'm trying to still figure that out how that works. But I know the Gomes speaks about the Fed rate, and I know interest rate is pushing up. It's getting close to about 5% right now. And I know that's what the article said. It's about like a quarter of a percent from getting there. And the last time they saw that number was about 10 years ago. And 10 years ago is when the collapse happened. What 2008? So it's like the same thing's happening again. It's right happening right before your eyes. But
Right,
it's just
exactly,
like
exactly.
we're like we're like right before it's about to pop off. So you know
Oh, wow.
how I'm
Okay.
positioning
Okay.
myself right now is I'm just
Wait,
You
repeat that. Repeat that.
broke
You
up
broke out.
again. You broke off
I
at
said I said the best thing to do is position yourself to get these deals because prices are going to drop and you're going to be able to find a
Right,
lot of
right,
properties for a real good price.
right. That's why I was kind of probing you and seeing what you thought about this.
Jack,
What
would you
yeah.
agree? Would you agree with my opinion is that we are at the apex of the transition between a seller's market to a I'm sorry from a buyer's
Buyer's
market
market. Yeah.
to a no, I'm sorry, I said it
No,
right.
no, no. Other way
Seller's
around.
market.
Other way around.
We
Yeah.
were in a seller's market. Now we're at the apex
Right.
Yeah.
transition to becoming a buyer's market.
Buyer's
So
market. Yeah.
Yes.
so now you tell me what. Be on the lookout for this, Jack. You tell me in the future if I'm right or wrong. But as the prices was going up in homes, if you're selling a home, you really don't have to do anything to sell the house. You don't have to make any upgrades or improvements if it's a seller's market. People want the home and they'll buy it as is without you having to do a whole lot of beautification. You don't have to really upgrade the kitchen and none of that if it's a seller's market. Am I right about that, Jack?
Oh yeah, you don't have to do anything, but you got to understand the ones who really trying to buy these houses at a high price like that are the ones who wants to change a lifestyle change, right? Because you're
Yeah.
willing to buy a
Mm-hmm.
house right at a higher price. You're really not gonna see a real return on your property, but you want to move from. I guess it's like people who've been working, who pretty much got salaries increases. Pretty much people in a higher, who has higher skills are getting salary increases. Um,
Right.
they're um, they're saving their money, so they're ready to change lifestyles, right? So those are the ones who buying those type of houses right now. And then you
Yeah,
Right.
have
but
other
but
people who
what?
are investors or more just are waiting. But I think it's shifting from a seller's market to a buyer's market all the way
Buyer's market.
because it's
Mm.
just it's just there. Like the
But
numbers I'm telling you, like 2008 when the market crashed, man, all you saw was investment groups buying up everything. You
Bro,
saw
that's why I'm asking
Chinese.
you these questions. That's why I'm like, dude, do you see the same thing?
Yeah, yeah.
What
Again,
I
yeah,
want,
exactly.
I
Wow,
want,
wow, wow.
Yeah.
I just wanted to throw out there one of the things that happens when you go from a seller's market to a buyer's market, as we established it in the seller's market, you don't really have to upgrade the house.
Nope.
People just want it. They'll buy it. It's like they can't. They want to stop the price from getting higher. They want to get it off the market. So people will are likely to come up with that earnest money deposit and put a real contract offer on it. They're not going to be messing around. When you go to a shift over more or less to a buyer's market, where the sellers really have to court the buyers more.
Hmm.
So in that environment, you tell me if I'm right. If you see this happening in the months ahead, now all of a sudden you got to add that, you got to update that kitchen, you got to update that bathroom,
Yeah,
you
yeah.
got to do all this extra stuff to
Wait,
make the house look
so Dollar Will, like kind of like that whole flipping craze that took place right before the crash,
right,
where everybody was taking out seconds to flip the home to then sell it, right? But you're gonna upgrade it and put all the granite and all that stuff in there.
right.
Oh, yeah, 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 yeah. God, it's like a
That's how
replay.
I
It's like a
also,
replay.
Yeah, so you end
Hmm.
up, so you have to
but
do
I
more.
think
Go ahead, Mike.
Let me just say this and I'm done. You have to do when the interest rate is rising and the price is coming down, and you're trying to attract people to buy that house. You have to put more into it. You have to work harder and invest more in the property to sell it at a lower price.
Hmm. Well, I've seen homes where, right, when it was like a hot seller's market, they'll price the house at a certain price, and you'll get some people get offers like 10, 11 offers, boom, one time. So it's like now it's a bidding war, and houses are going up in prices more than what they should be going up for. They're selling more than what they're worth for. And if you look it up, like, which is a good thing because if you sell in your home, you're making that an ROI on your investment. But again, right now, I think right now the best thing to do is, if you're smart, is just hold on and wait and buy when
Hodl, hodl.
but again now I'm in Texas, right? Right now I'm in Texas, and all I see is new construction everywhere in Dallas, Texas. So I'm like, all right, obviously the economy here is doing really well. Prices are really up. I look at the house prices here. They're they're doing great. So I'm like, it also depends on what state you're in. I know that I think it depends. It has a correlation with the state and then also the economy of that state
Well, let me throw
dictates
this out there
what's.
about Texas now. When oil
Hmm.
dives, and that's my position that it will dive. Texas is gonna be ugly.
Ooh.
They gonna bite it too because
Thank you so much, man.
so I hate to say, but I could be wrong. But that's what happened the last time. Because a
Well,
lot of
what the hell
oil
is
companies
what Dollar Will? What the hell else are they going to anchor themselves on if oil takes a dump?
they didn't. They had a whole bunch of foreclosures in 2008 and seven. It's
Didn't
Texas.
wasn't Enron there?
Yeah.
Hmm.
I mean, so yeah, the oil companies start laying off big time. So
Let's
it,
get to
it
the next. Excuse me. The next topic on our next docket on our topic tonight. We got two more. Then we open it up for our open mic. All right. This is a YouTube video. Title of the video is "It's Game Over for Europe and Africa. China has taken the upper hand." According to the discussions in the short 2-minute video, China has offered African countries, leaders, and heads of state more in comparison to what Europe has offered Africa in the past. Europe's relationship with Africa has historically been one of a European nationalistic agenda. China, on the other hand, has brought Africa into its vision that spans through the next 30, 40, and 50 years, in which African countries has a role in it. Europe does not offer African countries any close to what China offers African countries. Now that is what was discussed in this short 2-minute video. Um, any comments on this?
Well, what I was going to say was that
Yeah, I noticed.
Hold on, Jack. Uh, Go ahead, Mike.
what I was going to say was that this is Europeans shooting themselves in the foot, 500 years ago.
Hmm.
When they had the opportunity to actually make things right, even 100 years ago, even going back to the 1960s, they chose not to, and they punished Africans for trying to divorce them from such a battered relationship. And now that Africa has a new buddy, a new girlfriend. Now all of a sudden, now they want to have you know, a money shower. They want to throw it all around and say, "Oh, look what we can offer you." No, it's too late for that. You're like a jealous ex now. So I think Europe is going to feel the pinch worse than maybe the United States. The United States doesn't do that much business with Africa as it stands. I think they only do like maybe $100 billion in business, whereas China
Right.
does something like 500 to 600 billion. Europe's livelihood is dependent upon encroachment inside African economies. So if
Well,
Africa is turning away and moving towards the east. Even Russia is now involved. Now Russia has said, basically,
right.
if whatever Putin said, whatever Africa wants, they can get. Africa wants nuclear reactors for powering up the continent. They can have it. If Africa wants satellites, they can have it. We'll give
Yep.
we'll dump technology to you. They also establish bilateral agreements on going up to St. Petersburg and Moscow universities for exchange students in Africa. There's a whole litany of things that the East is
Yep.
offering that the West has never really offered, and they're paying the
What?
price for it now.
Well,
Go ahead,
Mike, I was
Ulysses.
going to say, I would like to even pause it here. I'll follow up on that sentiment in just a second, right? But first and foremost, like I think largely there's talks of reparations that have to even be met before you could even begin talks of investment. See, Europeans in the West are largely starting at a deficit position in reference to partners of the East, where the partners of the East are coming in with investment plans, right? They're coming in with turnkey investment plans. Whereas anyone who's coming from the West, there's a discussion of some sort of reparation before we talk anything with regards to any sort of long term, large scale projects, right? So the West is already at an inherent disadvantage based on its 500-year history, as you just referenced. Okay, and then when we look at it with regards to the Eastern partners as well as the Eurasian bloc with regards to Russia. Okay, now with regards to that right there, they're giving them a partner stake, right? And what happens is that as more of the African nations come online to do business with the BRICS conglomerate, what's going to happen is they're going to start to craft more savvier arrangements and agreements, okay, which will finer tune suit their needs. And the BRICS conglomerates will happily oblige. And that's something that the Western powers have never afforded African nations. It's always been like, look, here's the deal. If you don't want to take it, here's this guy we're going to prop up. We're going to take you out. And we're going to put him in your place, and then we're going to go ahead and just take what we want. So the choice is yours. But that's largely always been the deal that's come from the West. You can't come in, and we're saying that these deals were happening just what, I don't know, 5, 6, 7, 8 years ago. It's hard for you to just flip flop and just come back in, Angela Merkel and the like, Sarkozy, or not Sarkozy, but Macron and the like, coming in trying to shake hands and just saying, hey, look, it's a new day, a new time. No, you got to pay up first.
Any other comments on this? Mike, you got a rebuttal?
No rebuttal. I thought Dollar Will had something to say.
Okay. Dollar Will, Jack.
No, what I was gonna say is that my thoughts on that is, again, I've seen like more. I think it's like a more of a propaganda thing they're saying right now is that, oh, this is a debt trap for um uh, it's a debt trap for Africa. But I think it's more of a propaganda because, again, like what Mike was saying, you know, oh, I don't want my chick cheating on me, and they took advantage of Africa for so many years. And again, I heard many people say in other platforms that You know, they just getting tired of it. You know, and somebody's willing to help go in there and help out and build things up. You know, but now this is interesting though. So I spoke to a lot of other Africans, right? And I guess there's a big population of Africans out here in Texas, and I asked them what's their thoughts. I asked them what's their thoughts on. Let me step out. What's their thoughts on everything going on with this, right? And as far as with China, whatnot, they're saying that they feel like they're not really putting the money into the people. So that's another. That's their thoughts on it. They say that they're bringing their labor to Africa, but they're not empowering the people. So I'm not sure. That's from what I heard from talking to people. So I'm not sure how it's going to play out in the sense of are they really benefiting people or are they going to benefit themselves? Because it could go both ways. But what I've seen from my research, it looks like people are benefiting. It's just the infrastructure is not there. A person I spoke to from Zimbabwe, she said a lot of people, a lot of the millennials and young, not millennials, but the what's behind the millennials,
Uh,
Gen,
Z,
yeah,
Zennials.
yeah,
Generation Z.
yeah,
Yeah.
they're as far as education, they're training them as far as technology. They're well abreast on technology. However, the problem is that the infrastructure is not built, so they can't really use the information they got or they were taught there in their own homeland. So I think what China is doing is building up that infrastructure, and I think people look at it now like oh, they're taking advantage. But once things are built up, and once Africa is you know got his foot and got his foot globally around the world as far as like leading for our technology and other industry, people gonna have to shut the fuck up. I'm sorry, they have
Well,
to shut
Jack.
up. So
Well, Jack. Like to kind of speak to that, and I will say that this is all sort of born from a debate that Mike and I had some months ago, where he actually changed my position on Africa, right? Um, there's various levels to the infrastructure side, the infrastructure development side of what's going on in Africa right now. Now, what the role that China plays is from the foundational level, okay, but there is that mid level where I mean, gosh, now this spans back I don't know how many different podcasts on the Brain Trust channel and on Business Wealth Power channel that we've had. We've talked about acquisition of white space. We've talked about so many things. So we talked about so many things that actually um, uh, that actually is available, right? That still is a space that's available for development. And it's like it's not incumbent upon China to do it all. And the Africans are looking for the best partners. And I frankly, from and Noah can attest to this. Um, you know, he's he's spoken with delegates from different African nations, and they've told us that they ideally they would like to work with African Americans. So there's a space for us there as well, even on the infrastructure side. We just have to pursue it.
Any other
I was
comments?
actually just
Go
gonna
ahead.
I was actually gonna chime in and basically say that to Jack's point about the Chinese are bringing their people over there. We have to keep in mind that Africa has a literacy issue as well. A lot of those people were never developed from an academic standpoint to actually even understand Ohm's law, right? So they understand the fundamentals of putting, a red to a red and a blue to a blue or a black to a black, a ground to a ground. But from a high level standpoint, from a mathematical standpoint, that's missing. So a lot of infrastructure development has to be done by China because China doesn't really can't really rely on Africans to actually build that sort of infrastructure. Because if that was the case, Africans would have built their own infrastructure and wouldn't rely on China to begin with.
All right. Excuse me. All right. Let's get to the last topic on our docket. Then we'll open it up for open mic. Excuse me. This one is another YouTube video comes from CGTN Africa. Title: Africans are getting richer according to wealthy report. According to the wealth report. All right. According to the short 3-minute video, Africans are getting richer according to the conclusion of the 2018 African Wealth Report by Afrasia Bank. Individual wealth grew to $2.3 million between the years 2007 to 2017. 920 billion of the 2.3 trillion is held by high net worth individuals, individuals whose net worth are of at least $1 million. Now, despite these numbers, Africans still make up a small percentage of global wealth. Now, my questions I want to pose to the panel are as follows. A, what does it mean to be African? Does it does it mean if you are simply born in Africa, regardless of race, then are you African? Also, if these unwritten guidelines are relaxed and erased, does that open the door to non-Africans to take land, take the wealth, take the resources, and also permanently pin dark people to the underclass within the continent of Africa? I have another question after that go round to the panel, but those are the first few questions I pose to the panel.
Well, to answer your question, what does it mean to be African? It means that you are actually of darker complexion, and no, Europeans living in Africa doesn't make them African. I think what this article or what this video is basically referring to is that your darker population has now increased their status economically, so it's allowing them to have more spending power, and a lot of that is coming from technology market, allowing people to do business through the mobile phones, through the tablets, through the PC and the laptops. Um, and giving them better opportunities on the ground. It's open. The gig economy has opened up in Africa immensely with the emergence of all of this technology being dumped into it. So now you also have the finance space, more banks opening up in Africa. You got Barclays in Ghana, and Standard Lending Bank, I think, was just pictured here on this video. Uh, the banking system is starting to take place in Africa as well. So there's an emerging economies coming out of Africa that is allowing new middle class, new transitional class to be opened up, much like Black people did coming out of the '60s and the '70s.
Okay. Any other?
Yeah, that's a heavy hitting question right there. I would say
Yeah, the reason I asked.
I'm gonna dodge it this way. I'm gonna say in this, post colonial Africa, and I'll put in my Pan African views. I think what is an African? African is whatever those independent African countries say African is. That's now because they have uh, uh, let's say there's an indigenous African. So I would say I would agree with Mike in that sense. Melanated or dark complexion or black Africans, they're indigenous Africans. So that would be one. But you have whites that have been living there, and even as these black countries have come to independence, they allowed the whites to stay there. So you have whites that have never lived for several generations that have never lived anywhere else but Africa. So in as much as they are allowed to stay there, they're African. Now, as part of, I guess, remedies for colonization, you still got some reconciliation, some restoration that has to happen, from land that was stolen and all of that. But so
Absolutely.
I would say, what's African? I mean, it's up to, are there white Africans? Yes. Let's get right to that. Yes. Now, are they equal in citizenship and rights? I think that's up to every African country to decide that. But I don't know how they can have a two-tier citizenship. I don't even think they want that. I don't think I haven't heard of any African countries that don't that ban that ban Europeans from moving there and setting up establishing citizenship. The issue is
No, that,
whether you bought the land or stole it.
well, to your point, that would be suicide for Africans to actually to have a sort of an apartheid type system, reverse apartheid system. That won't work for them because the major powers that actually do business with them won't do business with them. Will collapse their whole entire government and their society overnight just by stopping business from a financial perspective. With a system like that in place, an apartheid system that banishes white people from having any sort of equal privilege or equal rights, that won't work.
Any other comments on it? All right, now the
Question to you, Mike. Okay, what do you
oh,
think?
now I was trying to follow a path to this before we
Oh,
go
go ahead.
into it. Do you have any comments on
Oh,
the
Jack,
first?
Jack, Jack didn't. Yeah, Jack didn't get a chance to even hear the question.
Yo, oh, you didn't?
No, we'll go ahead. What was the question?
All right, the specific questions were back to them. The questions that I first posed was, what does it mean to be African? Does it mean simply if you are born in Africa, regardless of race, then you are African? And if these unwritten guidelines are relaxed and or erased, does that open the door for non-Africans to come into the continent of Africa to start taking the land, taking the wealth, taking the resources, and permanently pinning down dark people to the underclass
Mm,
inside the continent of Africa?
that's a great question, man. Dang. Um, I guess first thing to act is what matters the most when it comes to that question. I think culture, right? Culture and also lineage, right? Again, when it comes to I guess white Africans, their lineage isn't really in Africa. The lineage is Europe or or Asia. But you have those over here. Our lineage is in Africa, right? Our ancestors were from Africa, so it's like we do have rights there. Maybe we were here for some odd time, but we do have rights there. Now I think um, that's pretty much I have to say. Like it's pretty much our lineage, and it sounds like more of like a reparations type of question. That's kind of weird, man. Like I'm coming back here to claim what's mine, but I don't think it's more of like claim what's yours. I think it's more of just you know adding more to it because you can't really go back there and just claim things. You got to go back there more with attitude to add,
Well,
and
the
then
the operative term there in reparations is repair, right?
Okay.
So what you're doing is you're putting the situation back in such a way where it should have been when the people who are colonialists came there, right? So that means that when they got there, they should have either leased the lands, they should have either purchased them. There should have been some sort of legal means of transaction that should have taken place. It shouldn't have been largely through like some conquering, conquest, and genocide and murder and all that type of stuff. That's not a legal means of acquiring property or land.
Now, the purpose of me asking these questions is this. I understand that portion of the 2.3 trillion of wealth that was generated between the years of 2007 and 2017 has gone to Africans. Now,
Mm-hmm.
there's something is the African American effect. I'm just going to call it the African American effect. Can you mute yourself, Ulysses?
Yeah, yeah. Hold on.
Um, the definition of what is success and what is success being successful. Throughout the video, you've seen Africans, indigenous Africans, like historical, start when they receive a windfall of money or a good job or whatever the case may be. They start to buy things that will perceive them on an outwardly speaking as being successful, such as buying Mercedes Benz, BMWs, big houses, buying bigger houses to trump their counterparts, and so forth and so forth. But once my what I'm getting at is this: um, once the doors open for foreign investment in this new age of wealth for Africa, then people will come and settle. As you see in the videos, you see black men with white women, you see a lot of white people, you see a lot of Indian people there. They come to tap into some of that wealth, a lot of that wealth. And in turn, they take the land, they purchase land, they purchase assets, they open businesses. They're going to work together to do all these things. Either they'll stay there and you get a larger influx of these different people, and or they send it back to their country where they're from. Is this it? At that point, what happens at that point? Will Africa start to cease to being land of Africans, or will it start to be a land of anybody that wants to come over and take advantage of the land, irregardless of if you want to give back to indigenous people? Will Africans go the way of the American Indian on their own land? Because this can be a slippery slope.
No, there's a difference between what you're saying about Africans and what you saw with the Native Americans in on the continent of America, North America. Um, the time that the Europeans came here, it was easy to get rid of the Native Americans because there were logistical advantages as well as strategic advantages to getting rid of them. However, in modern day form, when you're dealing with Africans, especially the melanated, darker complected Africans, there's 1.2 to 1.3 billion Africans. In America, it was not like that. It was not billions of Native Americans. It was millions, but it wasn't billions. You cannot get rid of this population or absorb them into the westernized way of life because it doesn't work that way. African culture is very similar to Chinese culture. It's very similar to what we consider Russian culture, right? When you look at the political structures and the economic structures of Russia, China, and the rest of the East, you see that a lot of it is aligned up through communism, right? There are a lot of ideas that came out of communism that Africa most more than likely, on a majority scale, had aligned themselves up with the East, whereas very few countries actually align themselves with the West. I think South Africa was one of those countries that aligned themselves up with the West, and it didn't work out too well for them because the same attributes that black people have in America, the problems that they have of economic strife, poor education, things of that matter, as a first world power, South Africans had the same exact issue during apartheid, right? So in
Mm-hmm.
America, um, you had National Party members came from South Africa into the United States just to study racism and bring it back into Africa, but it did not work very well for them. So we see a difference in strategy in terms of how the Native American was able to be moved be victims of genocide, whereas in Africa as a continent, it doesn't work that well.
You got any now, Dollar Will? You got any comments on what me and Mike just said?
Yeah, only that I'm just going with your first basic question about what to do with with the Europeans that are there, what to do with the indigenous Africans, and what to do with Africa, people of African descent throughout the diaspora. I think it's three different answers, and every question, every country is got to answer, address all three issues. And Jack said that our rights, we have a sense of heritage, but legally we don't really have any rights in Africa. I mean, countries are trying to formally address the matter in terms of Ghana extending citizenship to us. It's a decision that has to be made in all these individual African countries about what rights do we have. You know, I don't imagine that we're going to be equal to indigenous Africans, but it's going to be three different answers, three different questions to answer. Times what is it? 50? How many? 53 countries? Is that how many countries in Africa?
54, 56.
Yeah, so it's going to be a mixed bag, more than likely. What do you think, Mike?
Yeah, he's muted. Mike, you're muted. Jack, you have any comments on what we just said? As Mike.
Yeah, what I was gonna say is, so it sounds like to me from what your brothers are explaining is you're not really gonna have any real rights till you bring, like, again, bring something to the table, right? It's like any relationship, somebody has to bring something to the table, right? So it's like, um, do you think not in the sense of a right to be more of what you bring to the table, be more of like a return exchange? They see where you're coming from. They're willing to, open up the doors, give you citizenship, give you rights and things like that. So again, I guess you had to bring something to the table first, opposed to just going there thinking like, "Hey, I deserve this." Is that like kind of like what you mean?
Yeah, because I don't. That's a unique Black American thing that this idea that we deserve something and they owe us something, and I just got familiar with that opinion that a lot of us had this summer. Listening to O'Shea, some of his hangouts, and I'm like, wow, I didn't know that's the way we uh, think. I don't believe that Africans think that they owe us, or I'm not sure that even most of us think that they owe us. So we're gonna have to work this out. I think every country, Africa wants to grow economically, and you're gonna need trade, and you're gonna need some openness about other people coming there in order for you to grow. So I can't imagine that other people won't be welcome to be there. But back to Lionel's original question, yeah, it's a delicate balance. How do you? South Africa has had to deal with that, where once apartheid ended, you had everyone. You had Europeans, you had Africans from other countries within Africa, and you had Africans throughout the diaspora, including America, all converged on South Africa, and these others had more first world skills. And so the indigenous South Africans were displaced, and there's real friction about it and tension about it today in 2018. So yeah, it's something that's it's a delicate thing. These countries want the skill set and the money that these others, be they white or black, bring to their country, but they have to find a way to not have their own people become second class in their own country.
Now,
So
the what I was getting at, the perception of being wealthy and the perception of being not left behind by your peers, that could be strong and that can be very overwhelming. Case in point, us African Americans in America. It could be addictive. It can lead you to the wrong path, and it can even lead you to usurp and do other things that you will not otherwise do. Hence, this
can
current.
you give me more specific? Give me some examples.
Okay, like I don't want to bring this up on live, but a person has a car out, and the this specific type of car is well over their um, um, normal living habits. They can't afford it.
Immediate income.
Right, exactly. But the perception of being successful led them to get this particular type of car. So now they have to find a way not only to pay the payments but the insurance. And now they're doing certain things that they would not otherwise do if they were not in that situation. Now I'm taking that example and applying it to people that hasn't had money. I understand the culture, I understand this, but that is not 100% full and bulletproof. There are going to be people that see this money, this, they never had it in their life. They're going to use that same old story that these rappers say, well, I ain't never had nothing that, so that's going to cause them to act a fool and do the fool, get these things that they want other that they don't need. So that
Oh,
perception,
you're asking about the speed of if the economy could grow so fast that it could that faster than the culture can keep up.
right, can keep up, and if not, and you have these people trying to keep up with the Joneses, that's gonna. My fear is, and I stated this before, that that's gonna allow other people to come in, and they have the code. Their culture has caught up with, the influx of money. So they're going to come in and do the right thing and buy land, build businesses, build buildings, and things of that nature. And now these people that are trying to keep up with the Joneses, because more than 50% of African population are millennials and below. So now they're going to see themselves as working, to live, working to pay for this big house. That's my fear. I'm not saying that they're incapable of doing the right thing. My thing is, we know how strong this perception is. You live in DC. You've seen this. I've lived in Chicago. I've seen this. The perception is very strong, and it can tear that shame down.
Well, I think we're going to
I, I,
see the same that we've always seen. We just like we got the NFL and NBA first round draft picks. They get a lot of money and they act, ridiculous. And then when they get around 30 or something, then they get responsible. I think that's kind of unavoidable if wealth comes too fast after.
And even with Ghana Dan, he said it himself. He see these people that, for lack of a better term, don't have a pot to piss in or a window to throw it out of, walking around with iPhones. That's
well,
my
we don't
fear.
know. We don't necessarily know how they got those iPhones. A lot of those iPhones are usually unlocked on the black market and moved for cheap dollars or cheap pennies on the dollar. So it's not uncommon. If you want an iPhone, it will come through the black market and it will come at a specific type of price. And there's a lot of bartering that goes on as well. So not necessarily everybody's paying for an iPhone, right?
And I
You trade a vehicle or some kind of like scooter or something like that, or a motorcycle for an iPhone. I think that's pretty common, but I
and
think it's unfair. I think your assessment might be a bit unfair, right? So the whole purpose of China coming in and boosting up the economy on the continent is so that those goods coming out of China can be purchased. So there's a actual strategy to actually move in Africans into the middle class so that they can acquire all these Chinese manufactured goods and all these goods coming out of East Asia. In order for them to purchase it, they have to have, somebody has to either give them helicopter money or there has to be new jobs emerging to allow them to open up this new middle class. And Africa has never been a class structured environment, so to speak, like America is, because America is a hyper capitalist society. Most of the West is a hyper capitalist society, but Africa has never been in that position. So I think what you're starting to see now is some of the traits that does happen in the West actually get adopted more healthily um, through some of the economic structures inside Africa, right? So there's high taxation on vehicles and things of that nature that may be European or may have like a V12 engine or a V10 engine. Those vehicles are very rare. So the people who can afford them are already buying them anyways, and the people who can't afford them aren't looking at them at all, right? So if anything, they're looking at more efficient ways of living, and Africa hasn't really developed itself into that extent yet. And you may see it in the next 10 years or so, but that's I think it's unfair to put them in that same category of cooning, so to speak, that somehow they're going to do the same thing that African Americans have done. You know, African Americans are trying to make it to the middle class because white people have set up a structure that says that race and class are intersectional, so that if you're black, you're a lower class. Well, black people are trying to get out of that position so they can get closer to where white people are. In Africa, that's different because black people are the majority there and not the minority.
Now, I agree with what you said with the iPhone. I agree with that, but it's a perception of having an iPhone that will make it will help will have your peers look upon you as being successful. I'm not saying that they are going to be doing all these things to be coney. No, I'm not saying that. But what I'm saying is the perception of having these things, well, I will be looked upon as being successful. Even if you look at the movies, the Nollywood movies, I saw my share of them because I've dated Nigerian women. In the movies, that perception of having the big house, the what you call it, SUV that everybody like, that the rappers drive, the Range Rover,
Right.
the Range Rover, having these things in your front yard, having the cook, having the landscaper, having the guard, having these things, these perceptions,
Yeah, status symbols.
yeah, the status symbols that can over time start to erode the cultural strength because you're having this influx of money. That's just my fear. I'm not saying they will do it, but it's there.
Yeah, I think it's unavoidable. I mean, these are like first world problems, you know, with economic success. You know, it's going to the culture will be affected. The culture will have to change to have values. Will create a value system within the culture to
That will
to
protect them.
protect. Now, will the culture do it in advance of
That's
this
what I'm saying.
type of
Right.
I guess values corruption? Probably not. Unfortunately, the nature of things is, you know, we have to slip and fall and hit our head, and then we go, oh, you know, I shouldn't do that. I don't think that we'll be able to prevent um,
And that's what I was
some of
getting
the
at, like
negative.
preparing themselves for this, but they don't know it's coming because they if and when I say this, I'm not saying that they've been poor forever because no, our lineage come from them, but they never had this type of money. So the only way to for the only way for them to know what to do with this money is to look at examples, and
Yeah.
examples are through the television. Hey, BMW, black men working, be my wife. Hey, Mercedes Benz, drive a white Mercedes Benz. All the ladies that want you. You know, so you get all these examples, and even with the hip hop and rap, it's over there. So they do the things that a lot of hip hop and rap artists do. They may not do it to the extent they do, but they wear the clothes, they wear the dreads, these things, this perception that will slowly erode their cultural sanctity. And next thing you know, you have to redefine your culture to protect you against these things.
Yeah, I think that that's unavoidable. You see it in other aspects of life, like health, where and diet, where a lot of poorer countries they don't eat meat. They have more vegetarian kind of diet, and but one thing that's common: once they get some money, they start eating meat, and when they start eating meat, they start having our first world health issues, and it's just, you know, I hear you, but their culture is just probably going to be in reaction mode as opposed to preventative mode. But we'll see. But I haven't heard of any culture that's been able to guard against some of the side effects of first world economic
Problems.
success.
Right. And that's what I'm saying, you know, when because of these first world problems, it will send them down a path that maybe not protect. uh, These first world problems will make a opening for other people to come in that know about these first world problems and come in and take advantage. and purchase up the resources and the land that these people would not, because of this influx of first world problems, wouldn't say, okay, I got a $50,000 job. Let me go buy some land. Let me go buy this apartment building, or let me put some money in the Nigerian stock market or the Kenyan stock market. Their first problem, their first decision may be to go buy a house that's going to take them a while to pay for, or go buy a nice car. You understand what I'm saying?
Yeah, I would say you got to keep in mind when we talk about Africans, we talking about the oldest people on earth, the most resilient people on earth. And if there's one thing Africans do well, and that is survive. So
And I agree with that. Yeah.
Well, I think to that is that comes okay. We look at that. What matters the most for us that is discipline, right? And I think that ties into their school system. Now, those type of countries you have to pay to go to school, right? And their school system is like into like how it is in Haiti, where it's very strict, it's very disciplined, focused. Um, so if you get a book, you get hit. You get everybody's kind of like judging on how disciplined you are, right? And I think that plays a lot into the African culture, right? So I think you're speaking from a place um of maybe African Americans in the sense of, or just American people in the sense of a lack of discipline.
I don't.
Um,
I disagree with that because
go ahead.
it's been documented that when migrants come over here, yeah, the first generation is still disciplined, but as the second and third generations stay here, they become American first world problem Americans. They
Mm,
don't keep that their parents or their grandparents gumption. They start to turn to become American. So it's just not African American thing. Is this is a first world problem thing that that's I'm fearful of, that can break down, not fully, but erode their cultural strength.
okay, so in the return of that, okay, I give you coming from that. That does make a lot of sense. So, what do you think is a way to minimize that? To what's the solution to minimize that? To kind of preserve the culture. What do you think is the key to that?
Well, my only thought right now is for African Americans to just say, "Hey, we know it's going to happen." You have to be aware. You have to be on the lookout for these pitfalls and downfalls, because there's going to be there as the whole entire continent and certain countries start to get money. You're going to start to see a pop up or proliferation of um, Mercedes Benz, Mercedes Benz, Bentley, Range Rover car dealerships, and I guarantee you, a lot of them are not going to be owned by well, not black Africans. That's oxymoron to me. By Africans, you're going to see the proliferation of more McDonald's, more Burger King, more. You're going to see the proliferation of these first world things that they can spend their money on, because these people, these companies know that, hey, these people got money. Let's go over there and get some of that money.
well, you just described South Africa. It's a heavy. It at least on when I was there, it's very well, what's the word I'm looking for? The great extreme between the wealthy and the poor. It's a great divide.
And
So
please
Africa
don't get me
sees
wrong.
it.
Please don't get me wrong. I'm not saying I hope they don't get the money. I'm not saying that I want them to get the money. What I'm saying, that along with getting the money, be careful of these pitfalls that's going to come.
Yeah, yeah, that,
That's
yeah. It's
what
like I said, certain African countries have already been dealing with that. That, yeah, that's it. I hear you, but it's gonna be messy. Because you're talking about an increase in immigration they're gonna have to deal with. We're gonna have people from all over the world converging on them, changing their culture. Everybody coming there is not necessarily going to be respectful of their
exactly.
traditions, and so the culture is just going to change in the
Change their
same way that African Americans and whites, in America, we change each other's culture.
changing their culture, changing their constitution, changing what it means to be African. Um, as you see that in South Africa, they said, "Oh, Indians are Africans now." They're going to be changing things, and you know you're going to become into the spotlight now, just like you tell your children as you get older, well, as they get older, hey, you're about to be an adult now. You've never done this before, but I'm here to help you with this process. Being an adult is going to be the longest thing you're going to do in your life, and there's going to be responsibilities that you may not want to be, that you may not want to have, but you got to go through it. So why I say that to say, hey, you're gonna start to come into this money, and as a continent, we've been under siege and undervalued and in the dirt for more than 500 years at the least. But now you're coming with this money, you're gonna have vultures out there that's gonna come and put things in your way for you to fall in, traps for you to get caught in, things in which that's gonna take your money over the long term, where you can't create that long term generational wealth. They're experts in this field, and we, as African Americans, the ones that are sane and understand these things, that we've been through these things, where we have a track record of this for the last at least 100 years. We're here to tell you, hey, don't buy the BMW. You don't need that Mercedes Benz. You don't need that Range Rover with all the bells and whistles, because these people are coming in. Oh, okay, go ahead.
No, I was just gonna say that what you're saying right now is what Mugabe said in the '70s. Mugabe
Oh,
already talked
okay.
about this.
I did.
Yeah,
Okay,
he's
I did
been
not know
talking
that.
about. Yeah, he talk. Yeah, there's a whole documentary talking about this stuff. So Africans had already been warning that this is not what they saw what America has, and this is, I'm quoting Robert Mugabe. It was that he saw the way the Americans are living. He doesn't want anything to do with that.
Mm.
Africans
Hmm.
don't want anything to do with that. The level of poverty and stuff like that that comes out of capitalism is not something that they're interested in. So there's a new economic architecture that's going into place right now into Africa, and how to deal with poverty, and how to get people into a middle class. And what Paul Kagame has been doing has been hitting China back really hard, in terms of putting tariffs on Chinese goods coming in. The president of Uganda has been very vocal about putting tariff on Chinese goods coming in. If China wants to build something, 1/3 of their labor has to be African, people born in Africa. So there's been a lot of discussion going on in the background the last 20, 30 years on how to deal with, what you been expounding the last few minutes, is that what are you going to do with all these loose behaviors that come out of the West? And the way Africa is set up, architecturally and culturally, is just not the amount of taxes that they would have to pay.
Right. I was going to speak to some things some discussions that Dollar Will and I have had, and I will state for the record that Dollar Will has kind of shifted my view on this with regards to culture and how it relates to commerce. So it has to be intricately intertwined. If they were just to essentially adopt the Western view of wealth, right,
You break,
vis-a-vis the aqua. Oh, am
you
I
breaking
breaking
up
up?
real bad. Like
Okay,
every
I'm
third
sorry.
word is
All right,
okay.
hold on. Let me move over here. If they are to adopt the very idea of wealth acquisition, the way the Westerners view it, then yeah, they're pretty much up shit creek in a short amount of time.
Yeah, yeah, you still breaking up bad.
Okay, okay, shit. Okay, hold on. No,
I
he,
hear
he
him.
sounds he sounds clear.
Sounds clear to me too.
Really? Oh,
Yeah.
okay.
Oh, okay,
Um,
well, my apologies. Must be me.
I was just gonna say, to kind of speak to what Dollar Will had been, he and I have been going back and forth on. You have to be cognizant of how you incorporate your financial objections, your commercial objections, right, and your industrial objections, and how they synergize with your culture, right? These things are significant; they're paramount because this is what will minimize and reduce waste, risk, all these other things, right? That's kind of how this has to be managed. You have to see how these things fit into how your culture operates. So, if that's the mindset that Africans are starting to take, then I can see why they would be more mindful about what it is that the Chinese are trying to do when they come in and say, "Hey, we propose that we would do this for you," and they're going to look at it very, very, very stringently. Oh, sorry, got dogs in here.
Yeah, but
So
if I hear you correctly, Mike V is saying that that level of anticipation and planning is already Africans are on it. They've already thought that far and planned that far. Is that what you're saying, Mike?
Yes, sir. And that's been discussed through the African Union about how to
Mm.
manage, the economy, and how do you develop people, the human capital. How do you develop all these people? Because it's people of money at this point. You see human
Mm-hmm.
trafficking going into Europe, coming out of Libya, coming out of Sudan, and these places in the north. If you're losing all these people, you're gonna have to figure out a way how to replenish them. And if you're gonna maintain all these people, you're gonna have to figure out a way to elevate them out of poverty. And China between 1977 and 2005 had lifted over 150 million people out of poverty. When Chavez was in power in Venezuela between 1999 and 2005, he lifted I think like 10 million people out of poverty in Venezuela. So
Hmm.
we know that they've been working on strategies on how to get people up to the next level. And I don't think Africa as a continent is going to have that problem that Lionel is speaking of.
Right.
mm.
Yeah, I agree.
Well, this is another thing too. I remember we were discussing as far as rights. Now I know a couple of weeks ago, Mike discussed how African Americans can become a part of the African Union, right? Well, now let's say they were to do that, would that kind of open the door for you to have more rights over there in Africa?
Say that one more time. Your mic broke up.
Hold up, I'm saying like I remember you discussed a few weeks ago, right, about how African Americans can create own organization and be a part of the African Union, right? So it's like, let's say they were to do that, would that open the doors up for them to have more rights and in Africa?
Yeah, I mean Africa, they're under the microscope in terms of human rights violations as it stands. The Human Rights Index. So the United Nations is constantly looking at the development of human development over in Africa as a way to gauge where what needs to be done versus what's happening, and what's going to happen going forward. I don't think that I don't foresee that African Americans are going to have these problems where they go over there and they get beat up by other Africans, and somehow the United Nations needs to step in. I don't think that's going to happen. I think that there's been a desire to bring in more black people, and more importantly, more black men into the continent, to restructure the culture, uh, because there's still a lot of Africans who look at hip hop, right? They look at black men through hip hop and they say, "I want that. I want to take on some of those traits, while at the same time maintain my African heritage, right?" So,
Yep.
and I think black men in America are the benchmark for what masculinity and culture is supposed to be like around the world. So people take on a lot of hip hop. They do the breakdancing, they do the DJing, they wear the clothes, the fashion. They do a lot of the MCing. Not as great as we do, but to the extent where they want our culture. So they want us to be around them. And we could have used hip hop as a foreign policy. As a way for foreign policy to actually penetrate into many other countries and many other nation states, to deal with people on the ground.
I agree with that, and there were actually so many plans to actually do that, particularly back around like the early 2000s. I remember Karis One had the Temple of Hip Hop, and he had they had policy suggestions and things of this sort that they were actively engaged with. They might even still be with the UN. I know, BAM and Zulu Nation's been involved with a whole bunch of things with the UN. You know, so there was a time, man, where yeah, largely to speak to what you were saying, yeah, hip hop was kind of being utilized as a vehicle to sort of push a progressive agenda for melanated folks.
All right.
I think that was a good question, Lionel. That was a great question, man.
Uh, well, any other thank you. Any other comments before we close tonight's show out?
Are we going open mic or are we just closing out?
Oh, we've been open mic.
Oh shit. Okay. We closing out then.
All right. Well, don't forget to come back Monday. We have our space and technology show. And with that said, thank you all for tuning in Friday. This was our Economics Friday Hangout. Hope you enjoyed. Hope you learned something also and was enlightened by our conversations. So with that said, thank you all for tuning in, and we'll see you on Monday on Space and Technology.